Okay.
Oh, sorry. Okay, so I can't actually see participants or Q&A while I'm sharing my screen. So
Okay.
to be
I
like for
what I
like
can do is I can chat that to you, maybe.
yeah, or you can like if there are questions, you can read it out
Okay.
directly.
Okay,
Uh,
sounds good.
that should be fine. Let
Okay,
me.
that's perfect then. Okay.
Wait, actually, I think I'm trying to set up my other screen. Yeah, I think I should be able to see the Q&A. Let me test.
Okay, and I just updated that to everybody.
Okay,
And-
this is just to
and-
you. You should be able to see a ping.
Yes.
I'm switching it to.
You're to host and panelist, yep, and then I'm to everyone.
Oh, I am not able to switch to everyone. I don't know why. I just see hosts and panelists. So
Oh,
I
okay.
won't be able to maybe text a reply, but I can just address it on the
Speak to
on the.
it. Yep,
Yeah.
sounds good. Okay, we're still the only two.
Apologies.
Um,
Yeah.
hopefully we get some numbers. Should we
I
go
think we can.
quiet until people
Yeah,
join?
we can pause
Okay.
the recording if we need and restart at 5.
Or I'm just gonna leave it. I don't want to miss anything.
Okay, cool.
Welcome to those of you joining here as we get started here in the next few minutes. Feel free to drop a line in the chat and let us know where you're at and just to make sure everything's working. Yeah, we'll get started. Just let a few more people here join. Susie, I'll go ahead and check on the chat, but we'll go ahead and use the Q&A for now. Thanks for pointing that out. And to answer your question, Sarah, yes, you will get CPE for this, a credit. Okay, we will double check that for you, Sarah, and make sure we're all set there. Okay, chat is live, everybody, so feel free to drop a question there or in the Q&A, and we'll be able to get any of that answered. But yeah, we'll go ahead and get started here in just a few minutes, as we have more audience members join. right, we'll go ahead and give it a few more minutes here to let a few more people join, then we'll get started. For those of you just logging on, we're just going to give a few more minutes here, a couple more minutes for a few more people to join, and then we'll get started. But in the meantime, feel free to drop a line in the chat where you are, where you're looking to get out of this, what your background is, and can test that out. But yeah, really excited to have everyone here. All right, team, we'll give it just one more minute here, and then we'll get started. All right, team. So we can go ahead and get started. I'll kick this off. So welcome, everybody. We're really excited for the second installment of this specific webinar series that we're running on financial modeling. I'll be your moderator today. My name is Michael. I'm part of the LiveFlow team here, here with Alisha, who will be leading our session today. We have a lot of great stuff lined up for you, but want to briefly give you an introduction to Alisha and her background and understanding what she's able to do and what she's doing here at LiveFlow. So Alicia's looking after our FP&A templates and models here. She's a qualified CFA. She has a very extensive background in building these financial models and is our absolute expert on anything spreadsheets. She's a wizard, to say the least. So after this, if you want to book some time with her, feel free for a consultation on improving or streamlining your models. You just want to engage your services to build custom models to scale across your clients book as a whole. Let us know. Feel free to send her an email at alisha@liveflow.io. I'll go ahead and drop that in the chat for everybody. And yeah, if you also want to fill out a demo request on our website, feel free to do so as well and just mention this webinar in there. But I'll go ahead and share a few links throughout in the chat, so keep an eye out there. And feel free to post any questions in the Q&A in the chat, and we'll make sure to get those answered for you throughout the session. But I will go ahead and kick it off to you, Alisha. Thanks again.
Yeah, thanks, Mike. So yeah, it's great to meet everyone, and yeah, I see some familiar names here, so it's good to see you guys back. I was not able to conduct the beginner session, but my extremely talented colleague Josh was able to lead that one. So hopefully you learned something from that one. We'll just go through the basics again real quick, and then we're going to jump straight into modeling. This session is going to be a little more Excel heavy than the previous one. So if at any point of time you're not able to keep up, then just ask me to slow down or explain, and I will do so. Also, if you have any questions at any point, then just ping them, and again, I'll address it as far as I can. So let's get started. So this is basically what we're going to be doing. So first we'll just go through the basics really quickly. Then we're going to build a basic model. And as we're building the model, we're just going to learn some basic intermediate level formulas and functions. We might touch upon some advanced concepts. I just want to reiterate that the focus of this webinar series is spreadsheets rather than finance specifically. So we're not going to be focusing a lot on financial concepts or accounting concepts. I trust that this is something that all of you are way more qualified to answer than I am. But if you have any kind of finance related or accounting related questions, do post them in the chat, and either me or somebody from my team will be able to reply. Oh yeah, and before we get started, a quick shout out. We have some offers going on this month because of our modeling month. So if you are a new customer, if you haven't downloaded LiveFlow already, you can book a demo and you can just get a free template customization. So this will basically be a template that's tailored to your business specifically, entirely for free. So we usually charge for this, but completely free. And if you are an existing customer, then we have offers going on our premium template library. And there's a giveaway going on for one of our templates. And I think Michael will be able to share all of these links in the chat. You can also ping us or email us, and we can just get you any of these offers activated. So yeah, exciting stuff. Now jumping straight into the webinar content. We have a lot to cover today. So just quick on the basics. We want to build models that are user-friendly. So this has to be user-friendly for both you as the person updating the model and the person who is going to actually be seeing this model to make decisions. And you want your model to be as dynamic as possible, and we want to minimize manual touches. The more you can get some logic built in that the software can take care of, the easier your life is. And we make these things dynamic using spreadsheet formulas and tools. I know in the last session we covered data validation and index match, but I will be going through this again in more detail today. And of course, we want our model to look presentable. So formatting is really important. I've met people on both sides of this where they focus a lot on formatting, but not enough on making the model dynamic. So they have a pretty looking, but mostly incorrect or cumbersome model. And then I have people who are just so kind of formula oriented that they don't really focus on the formatting. So you can't really understand what's going on, but it'll be doing some really cool stuff. So we want a balance between these two when we're building something. So we want it presentable and we want the details accessible. So anyone who's using this sheet later on, they should be able to know where each number is coming from and what's going on. So this is the basics, and yeah, let's jump into a quick cash flow forecasting model. So cash flow forecasting as an exercise is generally something that business owners will undertake on a rolling basis. So you want to forecast for the next 5 weeks, or the next 13 weeks, for the next 2 years, 1 year, etc. Generally, we don't really see cash flow forecasting on years, like 5 years, 10 years in advance in accounting and bookkeeping. We do see it more in finance, especially if you're working for a fund or something where your aim is to create like one of those discounted cash flow models or to value stock, etc. But that's not really the purview of many of the attendees here today, and it's not what we're going to be focusing on. So we're just going to, for this exercise, look at a basic cash flow model and see where are all the areas that we can automate, and how you would go about building this completely from scratch. Now, forecasting, there are many assumptions and drivers, and basically everyone does it differently because every business is different, so there are different things that affect your cash, and there's no one size fits all. So even if you want to start an advisory business and you want to build a template that you can scale across all your clients, it's not going to be one template. But you can do is basically have a skeleton of a template, and then as you scale it, just tweak it for your individual clients. So as long as the basics are in place, you should be good. And the basics for a cash flow model under cash accounting, you just want to know where the money is coming from, where it's going, and when is the money coming in and going out. Under accrual accounting, there are some more complexity. So basically building a cash model under accrual accounting is the flow is a bit different. You would use the indirect method generally. You would have some adjustments from the balance sheet, and of course, all of you are way more qualified to answer how the accrual accounting cash flow statements would differ from the basic kind of P&L that we see under cash accounting. But both accounting systems can be used as the basis for building your models. Just know that they will be different, and there will be different things that we need to think about as we build. So for this very basic model, let's see how we would build this. Okay, so we'll start from here, and then maybe in the next session or on your own, you can think about how you would tweak this for your business or your clients. So we're thinking about a business that is following cash accounting. They have no non-operating cash sources. Okay, so we're not looking at the balance sheet for any items that affect cash in this scenario. And owner wants to know basically how much cash is available for them to draw down each week if they want to. So how would we go about building this? Basically, we want a P&L statement and a balance sheet by week. So hopefully you should have this from QuickBooks, or of course, if you're using LiveFlow, then it's something you can pull quite easily. And you want a mechanism or a workflow in your internal team to update this data quickly and easily each week. So from here, I'm just going to switch over to Excel, or rather to Google Sheets. And the rest of the session, or the bulk of the session, will be done in Sheets. But I'll be using a lot of these shortcuts as I'm playing around in the model. Don't get lost. So I'll keep this on the screen in the Excel file itself. And this I'll be using PC, so I'll be referencing the control shortcuts. But if you're using a Mac, then this is the Mac version right here. So let's go to the model. Okay, so basically this is where we want to end up, this kind of model. But what we're going to do is we're going to build this from scratch, because we want to learn spreadsheets here. So I'm going to start completely from blank. So I type sheets.new, this opens a new Google Sheet. I will share this model in the chat after I'm done building this one. And what I think would be a useful exercise for you to do on your own is try and recreate this. And obviously I have a lot of assumptions. In fact, as I'm speaking, let me just write those down, which won't apply to your business, but you can tweak those and see how you would adjust your formulas based on whatever you learned today. So I'm just going to start here with my assumptions. Cash accounting, only P&L items affect cash, nothing from balance sheet. Data by week. The idea of writing these down is more for, it's like a good practice. Any assumptions that you're making while modeling. Right now, I know these are more like scenario assumptions for this webinar, but if there were any assumptions that you're making as you're modeling, like sales will grow at X% or anything, write them down. so that if you are not around, somebody else should be able to see it. So it's good to have a dedicated area for writing down all of your sorry, I see a, can you zoom in? No worries. Let me see. Is this better? Can everyone see the screen? Could someone confirm on the chat? Yeah, awesome. Okay, great. So yes, dedicated area for assumptions and notes. Because let me name this something. Okay, and now let's get started. So I'm going to need a P&L and balance sheet. So I'm just going to use LiveFlow for this. If you're not a LiveFlow customer, then this is basically our product. We use this to sync data from QuickBooks. It's pretty neat and easy. And if you are not a customer already, you should seriously consider signing up, because yeah, anything that makes your life easier while modeling is worth investing in. So I have my P&L by week, and then let me also grab the balance sheet. So for this specific scenario, I'm not going to be reconciling the cash back to the balance sheet, because this is dummy data, dummy company, and my assumptions are, again, that there's nothing from balance sheet affecting us. But if this were maybe like if this is the first assumption that you would challenge or change, then you definitely would want to reconcile to your cash. So basically the change in your cash should exactly match whatever we are going to model out. And then again, just adding some colors. I like green to show that these are live reports, but the idea here behind color coding, behind all of these formatting little choices that I'm making, is that at the end of the day, somebody else using this model should be able to figure out what's going on. So by coloring these together, you at the very least know that they are probably similar in some way, like they are both source data, etc. I'll also maybe add a key somewhere that this is source data. So at the end of my model, I'll of course clean all of this out and make it more presentable. But as I'm making, if I have these notes ready, then it makes my life easier at the end of the model. I'm going to get a new sheet where I'll be actually building my model. Again, I don't like grid lines, so I remove them. This is a personal formatting choice. You can do whatever you want, but I prefer to have like a clean sheet. Okay, and I'll call this my basic cash flow model. Now, what elements do we need? Basically, we need cash coming in. So we want all the elements that affect cash, and we want cash going out. I'm just randomly leaving some space. Let me actually move my shortcuts here so that you have them around and you're not confused when I'm doing something. Yeah, so like this is how I'm moving between cells. I'm using my control plus up arrow, down arrow, and control shift for selecting, etc. So these are like the most common shortcuts that I will be using. Okay, so essentially we want all elements that affect cash to come in here. We're going to want all things that go out over here. Total cash in. I'm just kind of tentatively leaving some space. We can adjust the exact number of rows later on. Total cash out, net cash flow, etc. And now we want the time periods for all of the items, and we want the items that are actually affecting cash. So so if basically you are building this just for one company, if you're a business owner, it's just your business, or you're doing this for one client, then you don't actually need to do this step. You can directly copy paste the data and paste it here, because it's your chart of accounts and you know when it's going to update. But if you're making a template that you're going to scale across multiple clients, it's probably better at this point to have some option to dynamically change the elements that affect cash in and cash out, because when the data changes, like when your chart of account changes, then your model will break in that scenario. So we're going to find a dynamic way to add this data. And the best and easiest way is to use data validation. So let me add another sheet, and I'm going to call this data validation. So the idea of keeping this here, this is again a modeling choice that I'm making to house all my inputs for data validation in this sheet and not have them lying around somewhere randomly or hard coding them anywhere. I'll explain what data validation is, but the idea is that this sheet now, for anyone who ever comes and looks at the sheet, they will know that whatever inputs are going into my data validation can be found here. So it's a quick and easy way for a user to understand what's coming from where. Now, data validation, if you missed the beginner session, is essentially this option under the data menu. And what it allows you to do is it allows you to restrict what will go in a cell to only what you want it to be. So basically, you can pre-specify values that you allow in that cell, and then a user will be forced to only restrict themselves to those options. This is very good for us because we don't know what future users are going to do. So any option that allows us to direct their choices going forward is useful for us. So data validation is excellent for this. So now over here and over here, my goal is to get them to select items from their P&L. So in data validation, what I'm going to do is I'm just going to write P&L accounts. And then over here, I want a list of all the P&L accounts. So I'm just going to type index and select all of this, maybe some extra. Now, the reason for doing this here and not somewhere else is basically now if going forward their chart of account changes. So now there's a new line that comes in here, between these two, then it will still be captured over here. So this basically now is creating like a exhaustive list of their entire chart of accounts. And I'm going to come here and select, let me do this from the beginning so you see it. We go data validation, add rule. We want drop down from a range. Generally, it's better to select drop down from a range. If you use only a drop down, you have to like type in the values and then it's not dynamic anymore. There are situations where this is useful, but generally we want this. And we want to move to here, and then we just let's select some extra rows and keep just in case there's more chart of accounts added later on, or if you switch the client and this list expands, so our range covers everything. Let me just go all the way to 103. So we've got 100 rows selected. And then what this will do is it's creating a drop down that then will be used for mapping. I personally, again, hate the chip icon of this. So I go to advanced options and I make it arrow because chips are ugly, but up to you on what exactly makes sense for your model. And then this option over here under advanced options, if the data is invalid, always set it to show a warning and not reject the input, because Google Sheets is very weird with the data formatting rules, how it understands what is typed in a cell basically. So try to have this set to always show a warning. And once this is set up, what I'm just going to do is copy it down. Again, I've used a keyboard shortcut to copy the formula down, Control D, and I'll be doing the same here. We might need some more rows for cash. Yeah. Okay. And now we want to actually map the things that go into our inflows and outflows. So my inflows are all of this, basically. I'm just for now, like this is a hack or a shortcut. You just paste it as special, copy and paste it as special, and it accepts it. I just don't need this row because it's total. But of course, the kind of proper way to do this would be to go to the drop down and select all of them. And I think there's one more item that affects my cash, which is yours. And then I'm going to do the same thing for all the cash out. Is all of this. And I have this one as well. Okay. And then let me come to that later. Now we want the actual periods for which we're going to be pulling this data. So since this is a cash flow forecast model, we want to divide this into two kind of sections. One is actual, so actual data that we'll be pulling, and one is forecast. So half or a portion of this model will be just fetching actual data from the P&L that we've pasted. And the rest of it is going to be coming from forecast that we do. So actually, let's leave some space for forecasting. So forecast method. And we'll leave one more column for growth rate. And I'll come to this later. And then over here, let's actually start with the previous values. So let me remove this away. I hope you can still see it. And okay, now we're going to be touching upon the index match concept again. So basically, I think I've prepared an index match theory one. So index match is one of the best kind of tools, and it's the most powerful lookup tool that you can find in Excel and Google Sheets. So I know there's VLOOKUP, HLOOKUP, XLOOKUP, and index match. Index match does what all of those things can do. Although XLOOKUP has some advanced features, but we don't touch that right now. This one kind of function alone is going to allow you to select dynamic data. And by dynamic data, I mean that if I give my model some inputs, it should throw out the output that I want. So how this function works is essentially if you have data in this format. Basically, on one side, you have your line items. On other side, you have some column names, generally periods, and then you have some data in the middle. And this is just completely random numbers I put in. So how index match works is it's going to say that in this section, so if you can see this area that I've colored blue, so in this blue section, whatever data is there, I want one specific value out of that. But the value that I want might change. Maybe I want Jan's gross profit, or maybe I want March net income. It might change. So I want one function or one formula that fetches whatever I need. So to understand how this works, I'll break this down as this section. Each cell inside it has an address that can be identified as a row and a column. Rows are these, columns are these. I know it sounds basic, but this is the heart of index match. And if you understand this, you'll be able to manipulate this formula going forward. So you want a row address for each cell, and you want a column address for each cell. So for example, March gross profit, which is this one. So the address for this cell is row 3, column 3. Whereas maybe Feb EBIT, this one is row 1, 2, 3, 4, 5. So row 5, column 2, etc. Now, this is how the sheet is understanding this data. So what I say is I can, instead of like manually me going and counting all of this, I can use the match functions to give me these values. Match is a function that looks for a certain value in a range, in a list, and tells you the position of that item. So if, for example, Move this here. Yep. So let me give a prompt sales and column address March. So my match function, I can get match to look for the word sales in this section. Now it's important that I match the number of cells I'm selecting to this blue area. So like I cannot say from here to here. I probably can, but it won't give me accurate data. So because if I select this, then row 1 becomes this cell, this becomes row 2, this becomes row 3. That's not what I want. I want it to always look at this data. So for this row 1, row 2, row 3, this should be the nomenclature. So it's important that I select only the area that is corresponding to what I want to search. So match this value here. And the third argument is whether we want this to be approximate or exact. There is no situation where you want this to be an approximate match. If you're in a situation where you want a fuzzy match, then don't use this function. There are different ones that you would use. So over here, you can just go 0, which means exact match. So I only wanted to look for sales. I don't want it to look for any other thing. And then it will give me the output as wherever sales is. So sales is row 1, whereas if I make this gross profit, that's row 3. You can see this is changing. Similarly, I do the same thing here. Match this. In this area, again, I'm just selecting the area that corresponds to my table. I don't want like this. I just want this. And match has to be 1 row or 1 column. It cannot be more. Again, comma 0. So now I've created like a dynamic way to get the address of any cell within this blue area, depending on my specifications of row and column. And the index function, what it does, as you saw in data validation, is it just kind of creates a table. It creates data. So index match, when used together, index will create this entire giant flow of data. Match will tell it which exact rows and columns you want it to be in. So if I go index this stuff, row this, column this, and it will give me the value. And put some bigger number. So this is essentially what index match is doing. And to make it like to limit it to one cell, because obviously we're not going to make such a big table every time we want to use this. We just combine all these formulas as one. So I just copy this, for example. So instead of the first match argument, so where it says the row, what row should it be? I give it this, because then the output will be the same. And if I change this as the column argument. So I specified the column, specified the row and the index. Now, as I change this, everything changes. The addresses, the cell address changes, and the value that I want changes. So this final thing is essentially what I'm interested in. And I'm going to pause real quick to see if there are any questions, because this is a little tricky as a concept. Like, it's very easy to mug up the formula and just type index this, match this, match this. But then you're going to encounter errors and you won't know why it went wrong. Like maybe you selected more area than you should have, or maybe you selected less. Maybe your ranges don't match exactly. So there's plenty of errors that come up because it is a complicated formula. So if there are any questions on this, then please post it in the chat or Q&A. Okay, I'll assume there are none, but again, play around with this on your own. Like if there's one thing you take away from these sessions, it's like learn how to do index match properly on your own. It's the main thing that you use in basically any model that you're going to build. Okay, so I'll delete this. So now that we know the theory of index match, sorry if that took a little longer, but again, really wanted to emphasize on it because I see too many people reach out with issues on stuff like that. So now I want my columns to look like this. A limitation with this data structure right now, the way I'm looking at it, is it's not a number that I can easily play around with. Like Jan 1-6, 2024, this is not a number, this is text. So I think the easiest way right now is for me to prompt the user to always select something in this exact format. And if I want to prompt the user to select something, then of course my good friend data validation is the best thing. I come back here, we'll drop down from a range, but in data validation, I want to have it here so that future people can know where data is coming from. Now the P&L periods will be basically just this entire range. I can use index again, but index will just recreate it in a horizontal format, which is kind of not very easy to read. Let me show you. Yeah, it doesn't look like it's a bit hard to read like this. So instead of index, I'll use a function called transpose. Transpose just makes horizontal stuff vertical and vice versa. So there we go. Now we have a list of all our column headers in the exact format that they appear in our table. So this data validation can be our entire P&L periods. Take some extra space just in case we want to maybe make it for 2 years going forward, etc. And as usual, let's show a warning arrow. Done. Come back here. We have validation here. Now, again, like I said, since this data is not a number, it's hard for me to kind of make a dynamic formula that will automatically select the previous 2 periods. So I'm just going to paste the same thing and instead write a note to the user that to update model, update selection of periods in first row. So essentially what this would go is, so if this is Jan 21, or let me do it like this, Jan 1 to 6, 7 to 13, 14 to 20. We can automate this, and we have in many of our templates, but it's a bit advanced on how to split this and convert it into a number, so I'm not focusing on it right now. And then over here now, we want to forecast for the remaining time. So let me call this true. And then over here will be forecast. For the forecast, I want to say week 1, week 2, week 3, week 4, etc., rather than the actual dates, just to work around the date format issue. So I'll just go equal to +1. And I'm dragging this to the right. Let's just make it for 5 periods so that everyone can see. We can keep going for 13 periods or whatever number of periods we want. Now, while it's easy for me to write it like this, like, previous cell +1, for a user, this doesn't really make much sense. They're not going to understand what 1, 2, 3, 4, 5 means. I mean, maybe they will, but it'll be hard. So a kind of workaround that works for both parties using this model is to use this number format system. So we have an option for this custom number format. So, and I've pre-done it here, but basically it would be, you can type this from scratch, like week, close the quotation mark, and then just put 0 to represent a number and apply. So if you see here, although it looks like it says week 1, week 2, week 3, so it looks like text, it's actually a number. And what that means is so if I do this +1, you can see it's dynamic. I can essentially now keep dragging this out and it always updates. It's much easier to do this than it is to type week 1, week 2, week 3, etc. So limited to only 5 for now. Pass out. Okay. Then now that we have this, we're going to have two different formulas in this section. That's kind of why I've colored it differently. Again, formatting choices matter because they do give a strong signal to the user as to what's going on. So in this case, since it's differently colored, hopefully the user will understand that formulas are different. First, let me go ahead and type my index match function that we've just studied. So index. So for index, step 1, you want the entire central area where all your values are. So I come to the P&L, it's my data source. And I want to select all of this, all the way till my total. So C to BD. And I'm just going to freeze this. And by freeze, I mean, if you can see these little dollar signs. So that just means I'm locking my cell references. So that means I can move this up and down or left and right, and it won't move. Like the formula will always look at just these cells and not any other. And then my first match argument. So I want to match whatever is in column B. I'm only interested in freezing column B because I will be dragging this formula right. So I just freeze one, just the column. What range do I need? I want this range. The size has to match. Like it's fine if it's not adjacent, but as long as the size is the same. So 11 to 45 in my index, 11 to 45 in my match. Freeze this, 0 for exact match, close. For my column, the same thing. Match my selected period. Now I'm just going to freeze. Now I'm just going to freeze the row. So I don't want it to come below row 6, but it's fine if the column changes. So just one freeze here. And then I select all of this all the way till here. Like I don't select till here or here. It's exactly till here. It has to match. So this is C through BD. This also has to be C through BD. And you can see you get the value. And you've just kind of spent time building this formula once. But once you do that, you can then drag it across and you can drag it down. And yeah, it's just one formula that gets the job done. Now, as to these NAs, because there is nothing here to search for, it's saying that there's no value available. But we don't want to model with these errors. So you can just put an error message prompt. But for now, I'm just going to write if NA. So if NA means that this specific error, that if a value is not available, then don't give me this message. Come to the end, put a comma, open. Then, yeah. So I've had it like give me like a hyphen, as you can see there. And then I just fix the formatting. And I want this to be a number. No essence. Okay, so this is done, and I copy and paste the same thing down here. So like all my expenses are together. Now I just add a sum for all my cash in, and I will do the same thing here. Sorry, again, I'm using keyboard shortcuts for these lines and stuff, but you can use it with the mouse over here. Okay, and your net cash flow is cash in minus cash out. Now, since we have used all the elements from the P&L and only the P&L and nothing else, this actually is a good chance for us to check if we've missed something. So essentially what I'll do is I can say net income, and and just copy the same formula. Basically, because I've used all elements from P&L and only that, then my net cash flow should actually be my net income. So I copy and paste the same formula here, because net income is also a thing that I can index match because it appears in my P&L exactly here. So I see my net income, and then I can just see if there's a variance. This minus this. Now, ideally, this check should be 0. If it's not 0, this means that I've missed something. And this is why it's really important to have checks and balances across your reports. So because this is not showing some data, basically, I seem to have not mapped something that I should have mapped. And if I go back and check, it's actually my COGS. So I completely forgot to map my COGS, whereas these are cash expenses that are going out, So I'm just gonna get them over here as well. And now you see my cash expenses, my check balances completely. Obviously, when we start adding balance sheet elements to this, then this specific check versus net income is no longer relevant. But at that time, you can just reconcile to the final cash balance. So this check is important, and I will just reduce the size. So it's not part of my model, but it's still an important thing. Okay, so now that we have this out of the way, let's also look at how we can build our forecast method. So this is the last part. I know we're approaching the end soon, but let me just move this. I hope everyone has had time to see it, because I'm moving it off the screen now. Okay, now I'm just going to show you basic methods to add in like different kinds of forecast methods. There's infinite possibilities on how we can work in forecasting methodology, but let's just start with the most basic one, which is based on an if statement. By the way, the if function is like the most powerful function in Excel and spreadsheets. If you just know if function well and a few others, you're basically set. You're as good as most Excel experts. So let's see. I'm going to look at two forecasting methods majorly. One is trailing average 3 weeks. And growth or weekly growth. So essentially, the idea here is to forecast each of these line items based on one of these two. So first, the prompt needs to be to select. Again, prompt, something I want the user to do, then data validation, my best friend. Come back here. Focus method. And I'm just going to add another one called manual, because sometimes you need to override values. So I select all the area where I want this, go to format, go to data validation. You should all be experts by now. Add rule, drop down from a range. Go here, just select this. Few more rows. Advanced, show a warning arrow, done. So we don't actually need it for the first row. Okay, so basically now a user can select what they want. I'm just putting in 3 random ones so that I can test my formula as I build it. And now growth rate, obviously this is something that has to be manually added. So what I'll do is I'll just put a note here or enter percentage here. This way it's very clear as to what I want the user to do. Let me make this smaller. And then only if using. So this is a note that is specific to this column, so it's useful to leave it here. But I can also make a copy of this and put it in my notes. If using So somebody else using this model now will understand how to do this. And yes, now we come here and we write a very simple function. So we say if, the way if works is we basically put in a test, like test if something is equal to something greater than something, like a mathematical operator test. And if it's true, then it gives a certain value. If it's false, it gives something else. So in this case, I'm going to say if whatever is in column C, and specifically column C, not the row. So the row will change, but the column will always be C, is equal to, and I like to link this to my data validation tab, just so that if something changes here, it'll change everywhere. And I'm going to lock this. So if whatever is in column C is equal to this cell here, comma, then for so because I was looking at weekly growth rate, I want the previous week. I will not lock the row or the column because I want this to move, multiplied by 1 plus whatever is the growth rate that is entered here. Again, only column D needs to be looked. And if this is not true, then just take an average of the previous. No lock again. Yep. So right now, because it says trailing average 3 weeks, it's going to take an average of this. And as I keep moving in time, I'm just copying the formula. It's always the average of the prior 3 weeks. 289117. So this is the basic formula. And now, because I know we have 3 options here, manual, trailing average, etc. So for, I say if manual, override formula. Because it doesn't make sense to like build a formula for a manual entry because it's manual. So, and then a quick problem with averages, we might get these errors called div 0 or value. So I quickly will just add an if error around this. So this is similar to the if NA we saw earlier, but it covers all errors. So if there is an error, then just say check. And one final condition, if this is blank, then I don't want a whole bunch of checks coming up here, right? So one last condition. So as you can see, I can keep adding ifs to the left and the formula will still work as long as everything that's written previously is one argument in the false section. So this is blank, then blank, otherwise that. And I just look in B. Yep. So copy this down, copy this right. And we're almost at the end of our model basically. Copy all of this across, and then I can just amend the formatting. Aligned well. And I copy and I paste this here. I can drag it all the way down, move it to the right. And wherever it says check, that's probably because I haven't actually specified anything here. So let's make this weekly growth rate and let's test. Yep. So as I'm updating the percentages and setting this to weekly growth, you can see that the numbers are actually growing. So I'm just going to make this trailing average 3 weeks everywhere. And I basically just copy and paste all of this. Drag it down. And the same logic appears. So yeah, I mean, basically at this point, we kind of have a pretty robust cash flow model built already. You've got all your inflows, outflows. There are some checks that you would need to kind of, amend. And like right now, this is still sync check, I believe, because you can't average when there's no data. So at this point, I would maybe make it manual and override this. Etc. So yeah, I think this, I mean, there's as we keep spending more time on this. We're going to keep adding more and more elements to this, but I'll stop here just to kind of review for questions. I know there's a lot of data that was thrown at you, so please take your time to process. And if there were any questions, then please let me know. Let me go back to Michael. Yeah. So this is just basically a quick review of all the concepts that we have looked at. And yeah, I'll leave these last few time for questions. Yes, I will share the sheet.
Thank you so much, Alisha. Yeah, please, anyone with questions, Alisha, I think you can see the chat. So please feel free, everyone, chime in, and we'll take the last few minutes here to get your answers.
Yes. Okay, so let me share the sheet first. So full model build. You can try building it on your own. This is this, and demo model seen in webinar. So this is the model that I've created right now in front of you. I'm making this. Let me just update the access. Yep, so I've given you view access. Basically just take a copy of it for your own sheet and you'll be able to get it. Thank you. Okay, I see a question though. This method will work for any model. Yes, absolutely. The model does not really matter. Like essentially it's all just data in a table structure. Whether it's a P&L, it's a balance sheet, as long as it's in the same format, periods here, line items here, data in the middle, you'll be able to model it out. So yeah, I've put the things in the chat. You can let me know. And thank you, Jen. It was very sweet. So,
awesome. Well, Alisha, thank you so much. Like I think we're all in agreement here that was a really great and informative walkthrough. I hope everyone was able to take away a lot from that. Please make a copy of this to mess around with it, make your own models, see how it all works out. Yeah, we look forward to welcoming everybody back for the next installment of this series. And please, I'll reshare the links in there as well, but please request a demo if you're a new customer and looking to become a customer, and enjoy what you saw today, as well as what we can do in terms of just automation and turning those static reports into a lot of these full live real-time reports and consolidating multiple entities. And beyond that, keep an eye out for follow-ups, as well as any information on further webinars, as well as sessions, as well as getting credits. I think we may have one more question in there. Yep, sorry.
Will the links break? So by link, if you mean like when I did the index match, so for my actuals, you could see like a hyperlink appear. That won't work because that is a LiveFlow thing, but the formula itself will work. The formula will not break. You can have any kind of data structure, but it's not going to break at all. It's just like if you use LiveFlow, you have that added advantage of having it linked to QuickBooks. So it's one more layer in your model, but you can build it with anything. It's fine.
Okay. All right. Well, great. Thank you so much, everybody. Again, we're really excited for the next session. Please sign up. Please request a demo. If you're an existing customer, again, I just shared the link to speak with Josh and the customer success team to go through more of these. And if you are wanting to connect with Alisha to discuss these models and just discuss this in general, her email is in there as well. I'll go ahead and reshare it one last time. But thanks, everybody. Have a great rest of your day.
Yeah. Okay. See you, everyone, and thanks for joining.